Welcome back to the channel, your source for real estate, economic insight, and investment strategy that actually makes sense. I'm Jeff McKee with the McKee Realty Team, and today we've got a wild one. Mortgage rates just had their best day since April, and you're never gonna guess why. It all came down to Friday's jobs report, and trust me, it was a mess. But that mess, it may have just handed home buyers and real estate investors their best opportunity in months. So let's set the stage. All week long, we had major headlines, a Fed announcement, fresh inflation numbers, and a peek at second quarter GDP. But guess what? None of those events really moved the needle for mortgage rates. You know, the thing everybody is drooling over. Then came Friday. The non-farm payroll reports, arguably the most important piece of economic data for rate watchers, dropped a bomb. Economics expected over 100,000 new jobs. We got just 73,000. But the kicker, revisions from the previous 2 months slashed jobs another 253,000 jobs from the books. That's 250,000 jobs just vanished from the data. Why does that matter for mortgage rates? Simply, weak jobs growth suggests a slowing economy. If there aren't any jobs, the economy slows down. Simple enough, right? And what happens after that? The bond market surges. More bond buying, lower yields, which equals lower mortgage rates. And to that, the Fed suddenly looking a lot more likely to cut rates sooner rather than later. And boom, rates drop like a rock. In fact, at the end of the day Friday, the average 30-year fixed mortgage rate was down about 1/8%. That could save you hundreds of dollars a month, depending on your price point. So what's next? That puts massive weight on the next inflation report. And yep, you guessed it, the next jobs report, coming out in September. That's just 2 weeks before the next Fed's meeting. So if you're a buyer or an investor or someone waiting on the sidelines, the next 60 days could define your next 10 years. So if you want to stay ahead of the curve, now is a good time to plug into 2 powerful resources that we offer. First, the Realty newsletter, where we break down housing trends, local deals, and mortgage movements, so you don't miss your moment. And for the more hands-on investors, our mutual fund and ETF newsletter, selectionsandtiming.com, is built to help you ride the market, not chase it. Stocks, sectors, timing, all dialed in. Links to both of those are below. Subscribe today and make smarter moves tomorrow. The bottom line here, the jobs report was ugly, but the market loved it. And if this trend keeps up, we could be heading into one of the most buyer-friendly mortgage environments we've ever seen. Since the rate hikes began, of course. So don't wait around hoping it will drop. Be ready when they do. I'm Jeff McKee, helping you stay sharp in a market full of noise. Like, subscribe, and comment below with your thoughts. Do you think the Fed will cut rates in September? And don't forget to check out this week's listings and newsletter insights. Links below. Thanks in advance, Jeff.